Thanks again, Dominic. We'll move on to O3 Mining. I think Jose is in the room. They also have more than 25 million cash in the balance. They have the Marban project where they have the PEA. It's in Quebec. It's also part of let's say, affiliated to the Cisco mining group. They also have an equity stake in Cartier Mining that is here today. So I'll give it right back to Jose to start. Thank you.
Good morning. Thank you very much for attending. So really O3 Mining is a very simple story. It's a story of fundamental value, and it's a story that I like to call it of low risk in a sense and high reward. It is a story of execution and a story where we have been very disciplined, and the response to that is what we see here. We have a quality asset, which is Marban, and at the same time Alpha. We have a group of professionals that we have been working together now for the past 11 years with Blair and with the rest of my team for almost 5 years. And we have been able to build our financial strength. How we were very disciplined on allocating our assets that were better suited in other companies with time, without running and being very disciplined. We did that with Moneta Gold. We put our Garrison project there. We sold a project that had 2 million ounces. Now it has 11 million ounces. We just did that with Cartier. We put our project together with Cartier, who has now 2 million ounces, and probably in the future will have 5 million ounces, I hope. And we believe in ESG. We don't only talk about it. We are one of the first ones to actually get certified by Ecologo. I do believe that investors will eventually pay for those who cares about the environment, about social, and about governance. And we differentiate ourselves very much from our competitors in the sense that we do want to put this mine into production. Although, as you will see as we go through the presentation, there is a chance that we don't get to do that just because of the synergies that exist around where we operate. So going back to the idea of fundamental value, we built our investments. We have around $77 million in investments, which are essentially our positions in Cartier and Moneta Gold. And we have in cash around $20 million. We have a project that already has a preliminary economic assessment, a PEA, that shows a net present value of $423 million with an IRR of 22%. And this was done at $1,450 per ounce. Today, we are around $1,800 per ounce. If we were using $1,800 per ounce, our net present value will be of around $700 million. Our market cap today is around $140 million, which makes a great opportunity for investment now. And as this story keeps progressing in time, we'll just be creating more value, as I will continue to explain throughout the presentation. We have a very simple corporate structure. Cisco Mining, because it's the company from which we took the projects, has 24%, around that. Institutions are the usual suspects. We have Vanek, we have the guys from Merck, we have Steven Land from Templeton. So we have a very institutional basis in our company. And not less important, myself and our family office from Peru, we have 7% of the company. And we participated in every single financing since we started. We didn't get any free stock in here. And when we see the stock coming down, we suffer as much as any of our investors. And finally, we have been able to have following through the different institutions. We have 7 institutions covering us, showing research, which essentially shows that the average price at which we are evaluated is $5 per share. again, to reiterate, the fact that we have an opportunity here to make money is the difference between our enterprise value, the 2.3 million ounces that we have right now, everything in measured and indicated, and the fact that we have a fundamental value on the PEA of $423 million. We are located in a prime jurisdiction, such as Val-d'Or. Even as important as that, and I don't have I'll just go there and explain you maybe. So it is extremely important to know here that where we are located in Marban, right in here, it's only really 12 kilometers to the Canadian Malartic mine from Agnico Eagle and Yamana, and it is 8 kilometers to Goldex from Agnico Eagle as well. We are assuming right now two scenarios. The first one, which is the easiest one, assume that we are going to put it into production and that's it. And our preliminary economic assessment shows 116,000 ounces per year. We are moving now towards our pre-feasibility study, which means that we have been able to convert it, all the resources that were in inferred resources, to the highest category, which is measured and indicated, and we are finalizing now the engineering around the project. So we can put that into production by ourselves. We already know what are the numbers, but we have to know a couple of things that are important to know. Canadian Malartic, being Yamana and Agnico, is running out of ore on the open pit side. They have been able to find more mineralization at depth in the underground component, and they have been extremely successful there. But if they run out of the open pit material, they have a plant that cannot stop, does not have two circuits. It's one single circuit, and that plant is 55,000 tons per day. From the underground component, they will be able only to extract a maximum of 30,000 tons per day. So what I'm trying to tell you, and very directly, is they will have need for material of 25,000 tons per day, yes or yes, starting on 2026, which is precisely the time at which we will be in production. Have in mind that if they want to process the ore, they will need to start permitting, because in Quebec, we need 2 years to permit a mine, and has been working very well. And yes, it seems like a long time, but we know that at least it works. So if they were interested in a company like us as an acquisition target, they need to move in the next year to year and a half. Otherwise, they will be late. So that's when this story starts to be even more interesting beyond what we can do by ourselves. Because now we have other players that will be playing our story one way or another. And in the case of Goldex, they are running out of ore by 2027. Or running out of high-grade ore. So we will need, in the case of Goldex, or Agnico will need, certainly to bring other projects into the story. So which are the projects that right now will be part of the Val-d'Or story that has not been consolidated yet? There are only 3 stories. OIII Mining, 12 kilometers from there, Cartier, 16 kilometers from Goldex, and Probe, which El Dorado has already 10%. So if we want to be patient, make sure that we make money, wait 2 years, we will certainly be in a safe position where the downside has been covered, the upside is in your hands. Quebec, of course, is pro-mining and has been promoting this quite a bit. This is just to show how close we are to Canadian Malartic. And not only that, but right now, in the red part is where we have been doing exploration. There is where we have 2.3 million ounces. We certainly believe that this is a project that will end up with many more ounces, especially towards the green area that we see in there, which is an area that we are currently exploring. So what we have done so far. We told everyone that we were going to do a pre-feasibility study by this year in September, and we have been accomplishing what we said. In 2020, we said here is a PEA. 2022, We have converted all the ounces from 1.8 million ounces to 2.3 million ounces, everything in measured and indicated. We have finalized our metallurgical results, or metallurgical study, sorry, from 93% pretty much to 96%. We're working right now on the geomechanical lab testing, on the cost estimates, the hydrology, the mine design, the mill and the design, and the environmental baseline should be done in the next quarter. And with that, we will be ready to submit the pre-feas. And with that, it's essentially the beginning of the environmental permitting for us. And that environmental permitting, again, fits into the concept that I was mentioning before. If we want to be a little bit, I don't know, strategic, if we begin the process, Agnico and Yamana will not be able to come in. So for them, will be very important to monitor when we submit permitting. And for investors, that timing is also important. Certainly, where we have the opportunity to increase resources very fast is at depth. But at this moment, we don't believe that we should be doing drilling at depth, since we already have 2.3 million ounces, and these ounces will be mined after year 16, which will not be adding value to the net present value. But that is the opportunity to increase resources with no doubts. Alpha is a project that used to be a company called Alexandria Minerals, where we bought it for $35 million. Our initial bid was 20. Agnico Eagle came on top for 25. We bought it for 35. We have been expanding an area called Bulldog, where we assume we're going to end up with a couple 100,000 ounces, 300 to 350,000 ounces, and we will have a new resource by October of this year. And we have been doing a lot of exploration around, and we will continue to develop this area, which is very interesting, since Agnico Eagle has that area called La Casaba, right on the right-hand side, and we have the extension of that area as well. So what are the next steps? Are very simple. We're going to finalize our pre-feasibility study, commence our permitting process. We will finish the resource for Bulldog, and we will be focusing on putting this into production. Meanwhile, what are the things that could happen? Well, that Philippe with Cartier finds 5 million ounces, and then that reflects into our 19%. That Moneta Gold continue to find ounces. They have increased, as I mentioned before, from 5 million ounces to 11 million ounces, and we have 30% of that, 27 to be precise. And we will continue to advance our project towards production, and certainly being very alert of what the majors are doing around the areas where we operate. So with that, I conclude the presentation. If there is any questions, of course, I'm here to respond. Thank you.
Thank you. Thank you, Jose. Any first questions from the audience? Philippe?
You did insist on the mill that you own and yet you have...
That is correct. Around north from Leuven, we have an option to buy the Orbel mill. It's an option that we can execute any time in the next 3 years. It has a capacity for 1,400 tons per day. And that could be a solution to put into production Alpha, yes. And if we end up creating there, which is a dream, I don't know if we will be able to do something, but a metallurgical complex, so we could get a permit, so we can, instead of only doing 1,400 tons per day, we can work with the government of Quebec and actually build something of 40,000 tons per day or something like that. We will be able to bring everything around that mill. But at this moment, we're just only doing the initial engineering studies.
Other question? Maybe a very short one with 1 minute left. Let's say Sutter doesn't show up after your PFS end of this year. Would you, let's say, go together with Philippe and make one, let's say, new miner in the district? As you already have the equity position there and the knowledge and the, let's say, friendship.
No, we have a great friendship, and we expect that Philippe, again, finds 5 million ounces. You know, you have to be open to everything. And if the market continues as it is, you will have to build critical mass. It will depend on where we are in the market. I never say no to anything.
All right.
The only comment is I get back to his insistence on a mill being a business unit in itself within a mining company. The mill at Canadian Malarkey is calibrated for 55,000 tons per day, and if it shortfalls, it will have a tremendous impact on that operation. So mills are very hungry entities, and you need to fill them.
I can guarantee you something, by 2026, well, by 2024, because it's 2 years before 2026, you will see a lot of M&A activity in the area where we operate.
All right. Thanks again, Jose.
Appreciate it.